Good morning, traders. Welcome to another market analysis session again. Today is 4th of August, is a new month, and not so much is happening. Markets, most assets are just on a consolidating range since on Monday. No major music movements generally, apart from the gaps that was covered, like oil markets and the rest. And I've been saying this that we should pay very close attention to our fundamentals, and all these fundamentals are key. So we had oil at this uh, buy limits last week, 80.53. It was the buy limit for oil trade from last week. Um, you know, we already envisaged that we were going to buy from around there, which will be making some changes because of the gap and because of the recent news. Headlines today says that Iran war of these casualties if US naval blockade continues. So that's the current state. And what's the current state of the atoll? Because Donald Trump recently said he's halting the strikes, and he want them to get into we want them to talk, you understand? So um, I think through neighboring countries to mediate and see what they can do. Pakistan has urgently invited top Iranian negotiators to Islam Islam Islamabad in what appears to be a renewed push to restart the stalled Iran-US talks. Pakistan Deputy Foreign Minister Mohammed Ishaq. So what does all this do? If there is peace, I want you to understand that before now, when there is war, there is global commotion, uncertainty, people rush to buy gold, you understand, and all that. But as a result of inflation, right, that this war might bring about, and because of the people that are currently involved in this war, which is the Iran and the US, happen to be like major oil producers in the world, and the Strait of Hormuz, major channels also affecting other countries trying to distribute oil to their trade partners and the likes of them. It will really result in inflation. And when there is inflation, most likely there will be increase of rates. And when there is increase of rates, investors will find treasuries, US bonds, and the likes more attractive, you know, and they would channel capital to that place. So you see, the US 10 yield currently is at 4.69, 4.692, right? So people would rather put money here than to be looking at gold. They're at least looking for it to make money. Do you understand? So that is what it is. However, if there are talks of we are not going to fight, we'll reach a truce, whatever, you understand. And Iran has repeatedly said it is not in direct negotiation with the US, although Trump claims talks are happening and that two Pakistan Qatari negotiators are currently working to secure a meeting date and venue with both sides. Okay. So if there is peace, right, what it will do is it will make the there will not be like an urge to increase rate. Most likely there will not be dovish, which means that those things that we find attractive, like all these, might not be that attractive anymore, and they'll probably look for other assets like maybe gold and the likes of them. Which means that if the war stops now, it is expected that gold would rise. You understand? Gold would rise. But if the war continues and the firing continues, it's expected that gold will decline, and while the oil markets will keep on rising. So currently, this is what we currently have. So because there is you know, negotiating, whatever, I will say that I think this point is the point where we fundamentally, because this market now, they are more fundamentally driven than technicals. Fundamentally, it is the point where we need to close our trades on oil. This was maybe from if we were there from maybe from the weekend. But since the market already triggered and we are still in the trade, you can maybe adjust your stop loss from this point up to this point. If your stop loss was around there before up to this point. And for those that had been on this one since last week. They've bought. It didn't hit CP, but it was very close. I really hope you made something out of this. So this one, we are still going to make something out of this one. The way I'm looking at it. So currently, technically, we have seen some formation of a steady base where buyers and sellers, had to, fight, and you should understand that every candlestick that you are seeing is not just there for decoration or something. You know, it represents the record of the battle between the buyers and sellers. You understand? Or the bears and the bulls. It is the record. It shows that for this candle now, they all entered at this price. The sellers push the price down. However, buyers gain momentum and push the price up, eventually breaking above the previous indecision that was made, which is this doji. And um, um, in that note, it means that price will push up. However, they tried pushing price up again here, but there was indecision and then sellers again gain momentum. But I want you to understand that because of that, battle they had here, this is a battle of buy, sell, buy, sell. Most likely, after this breakout, market will push back to reclaim this area, and again, buyers will most likely, like 60 or 70% of the time, come in. You understand? There's nothing that is 100%. But usually, if you work on repeated patterns like this and check what has happened before now, you understand, when patterns like this forms, you'll find out that when price gets back to those areas, there is always a fight back by the people that were dominating this area before. So most likely, if price comes back here, it might give us another opportunity to buy, even though fundamentally it does not agree. But the fundamental itself is just shaking, as you can see from the update we read, that Iran is saying that they are not in direct negotiations. However, they are trying to see from the mediators like the Pakistan and Qatari, those nations, to see if they would be, able to secure a meeting date and venue with both sides. So that has been what is on ground. So it is shaking. You can just see that Trump tomorrow will just come and say, see, forget these fucking guys around. We are going to keep bombing them. And, you just say, oh, gap up again. So you would, be cautious of the technical side and also the fundamental side too, as well. You have to also take note of it. So moving forward, what we're doing in this point is looking for opportunity to buy from here. Since we already have this, we might be looking for the smaller time frame. We might be looking for okay, let's see. So because price has already risen from here to this point, there have been like break-off structures to the upside from here, and we might be seeing some mitigation block. This is a mitigation block. This is a breaker because this came from a high to a low. You understand? This came from a high here down to a low. So this is a mitigation block, and then this is a breaker. Mitigation block here. This is a breaker. This has been mitigated already. We expect that price will consolidate down into this level. Again, give us an opportunity. So for me, I will be looking for an opportunity to buy from 0.618 here. So I'll look for an opportunity to buy from here. But this time I will just reduce my stop loss below this edge here. So I'm looking for an opportunity to take the trade from here. So it's expected that this consolidation that we are looking at now might continue for a long time as they are still trying to, find um a means to talk or not talk. You understand? So why the talk, the claim is still going on, we might be looking for an opportunity. Because why am I saying that I still want to buy? If you look at markets as an area to reclaim at around there, it seems as though market already covered little of the gaps that was from there, but market still has an area to fill up this space here that was left behind. So market will most likely still come to this level, you understand, before we now see a downward push in the market. So market still has this place to close and this place to close. So if you are already on the buy, I would just say you just reduce maybe your stop loss to this level. And if you are not there, you can wait for market to come down to your entry at this level. That's if it does before you buy. So I'll post this in your group chat as so this is crude oil trade buy limit. Moving forward, we will be looking at DXY to see the strength of dollar. Currently, dollar has declined considerably to this level, even below the level we were looking at. And currently, we can see that um, this level is not like a double bottom. If price breaks down below this level, dollar will most likely be pushing down. So we are watching out for this level. Let me make this more visible so that you can see. So we are looking at these two level here, where price came to before, kind of swept liquidity below Tuesday's 16th of June, and this is 14th of June. So this is, I think this is June's low. Okay, no, that's not June's low. June's low was around this level here. Here we have the low for June. So I think market might still have a low to sweep down here before eventually going to the upside. So two things may happen. Is either it sweeps this low or it just keep going to the or breaks this low, right? Either it sweeps this low or it breaks this low. And if it breaks this low, it will, change the whole market structure, and then we'll be looking for an opportunity to sell this market. So while we are still looking for this, it is now clear that dollar has declined, and and other currency PS2 would have seen a decline. So this is more like our first analysis for the week. Let's quickly see what's going on with Euro USD, which is like about let's say 99% correlated with whatever is going on with the DXY. So Euro USD itself, let me delete all what we have from last week. All right. So Euro USD has from yesterday. This was Wednesday. This was Monday, Friday. So from Friday, we knew already that there's a possibility that markets will keep coming. Market will come to the upside there and probably give us an opportunity to sell from around there. That was the idea. So we are selling from here because this place happens to be like a mitigation block, right? Our market has consistently dropped to the downside. This is a lower low, a lower low, and a lower low. So it's expected that between this point to this point, all what we have here is internal range, and markets will also start declining from this level here. So while we are trying to sell here, if you come to the smaller time frame, you will see that market also has reacted to that level. It gave a gap from weakened into this level, and as a result of this gap, markets has also formed something like a battle between buyers, sellers. However, we will not consider this as a steady base, right? But we would notice that sellers first push down, giving them a hope or something that the market is bearish at this top here. A lot of people would have sold, and people that did not get out here were taken out, right? Their stops were also taken out at this level, and market has resumed another bearish movement to the downside. Though this bearish movement has not made any considerable break of structure yet, and at this point here, there is so many indecision at this level. So, looking at what is going on all around this point here, there are two things you have to do. You just have to wait, right, for market to make a clear move before you jump in. So we know already from the bigger time frame that market is actually bearish, right? But we want to see the smaller time frame give us a much more significant, you know, shift, the movement, a market structure shift before we enter. So this is the 4 hour. We'll wait for a break below this low, like that was formed before we look for an opportunity to enter. Or if there is a continuous break above this low, then we will understand that market is most likely coming to this stop here where you have this red line to break this top. And when that happens, it means market has made a very, very distinct structural shift, and which means that market will most likely keep moving to the upside. You understand? So there's a rally from here to this point. If you ask me, I would say that even this rally has happened. I'm seeing a very strong momentum that the market, if not that my bias already is bearish, right? I would take a buy from this level. I see that market will come back into this level. There's a break of structure already. There is a breaker around there. If I go to like the smaller time frame, let's say 4 hours, and most likely there is a there's also a gap around the market most likely come to fill right, an imbalance, right? So once market gets here, there would be a continuous move to the upside. So that's what I'm looking. But in the smaller time frame, if you look at it well, you find out that that gap might be market breaking this low and pulling back and to come down to this level. So just follow what we have in the bigger time frame, which is already a bearish, and until we see a close above this level, we will not go bullish, right? We will still keep going bearish. So let's still look for an opportunity to go bearish, which is from around there. So if market is able to break this, this there's been consistent indecision, like my market made a bearish move, then a doji, another doji, and another doji is about to be formed again. So once this happens, our market breaks down or breaks above. Whichever one market breaks, if market breaks above, I will wait for a little pullback and follow. If market breaks down, I will not wait for market to come and break here again before I follow. I will start selling already from this. So if it breaks down this box, right? So when I'm talking about breaking down, I'm talking about this box that we have here. Let me put it like a smaller box. So whichever one market decides to break, right, above or below, I would now follow um the trade here. So that is what you know I'm currently looking at for gold market. So moving forward, there will be no trade, so we are waiting. There is no major trend there. Market is just consolidating from here to here. We're waiting for a proper direction. For GU, I think GU already planned to buy before now, and if you look at that level, so market has been buying from where we intended to buy from last week, and it's still on because for GU has already given us a view that is bullish since last week, and we decided to say, okay, if market comes down here, we'll take an opportunity, and which is what market is currently doing. So we already used our Fibonacci, we measured the swing, and then we took an opportunity to keep buying for GU. So if you're on GU trade, just enjoy your profits. Make sure you keep filling your stop loss so that you are not, because anything can happen. So this is GU currently. And because of the war negotiation, if negotiation and everything is going on well, United States will not want to increase their rates anymore, as because they will be looking at inflation will maybe kind of subside and stuff like that. And when that happens, it means dollar will most likely be weak, right? Dollar will most likely be weak. Assets like gold, GU, EU will rally to the upside. So that is what we are looking at, and that's why we are only seeing this movement. So if you ask me, for people that maybe missed this trade from last week, I would say you can look for an opportunity to join from around here. Wow. So for this trade, I see market might most likely retest this level. But yes, looking for an opportunity to join around there is not bad because market did not break any major structure to the upside. Let me see 4 hours. Okay, yeah, there's been a break anyway. So because market has broken this level to the upside, there's kind of a mitigation of this breaker already. So market will most likely continue to the up. So we might be looking for an opportunity to take trade from here since this is the swing. Look for an opportunity between this level. So you'll be buying still at a discount level. So market will most likely retrace here. And if you look at here, it also aligns with like a very tiny, imbalance here. Market has made one, two, three. This is an imbalance. This is also an imbalance. This is bigger than this. However, this aligns with this, but why this is much more stronger. This you can see market reacted to this, making this high. So market will make this high, consolidates like this, make this high, consolidates down, right, and for moving to the upside. So that place is a good target to get a new trade from. So if you are looking to join this trade, you want to take a position from here, put your stop loss below this level, which is okay, and then also take the ride up to this side here. So this is what you should be looking at if you are not in the trade already and you want to join for GU. Copy this in the group. I don't know if you have any questions so far, or we are okay. We can just keep on riding. So you have to understand that, for every trade like this, there's usually like a battle between buyers and sellers. For every trade that you see, is the momentum. First of all, you have to see where the momentum is. Where is the momentum? To get that is you check the order flow. Is the order flow bearing the order flow? From the higher time frame, it gives you a better picture of where the trend will most likely stay at or which will most likely win. It's just like for oil now. For oil, we know oil has been bullish, and that's why we decided to take entry here. Even though there are fundamental news, those things might later work in your favor because you already had like 50% power hand when you go with the other flow. You understand? So moving forward, this is good market. Good market too is also showing some sort of weakness already, and I don't want any surprises. So because I already envisaged before now that there's an opportunity, yeah, there's an opportunity to look for gold sell from yesterday. So yesterday, yeah, I already made about 500 or how many pips? Let me see. I think I already made like I thought I was selling from the tip down there. Yeah, I didn't make close to 500 pips. But with my zero point 0.1, I was seeing about $500, and I left it. I didn't because I was hoping that the market will come. I didn't know why. I had not seen any reason why market should have, just retrace back. And I was looking that, oh, if markets even retrace, it will come. And sometimes, we just have to. Sometimes it happens to traders, especially traders that are disciplined, that don't close their position until it hits CP. You know, so sometimes it happens. You just see a lot of profits, and at the same time, just goes back to your break even or hits your stop loss if you are trailing the stop loss. But it's not wise if the thing goes back to negative. It's not wise at all. So looking at what we have this morning, you see that if you draw your trend base, you have one, you have two, you have three. This is more like a bullish pattern formation. This is a bullish uh wedge. It's called bullish wedge, right? You have this like this. So market has broken out, bounce from here, and then you see market to the upside. And I guess this is being fought currently because of what we have with the war. You understand? So that's why I used to tell people that you cannot say you are trading and you are not paying attention to fundamental. Who are you? Say smart money you are using. You're not deceiving yourself. Yeah, don't think because price itself is not buyers and sellers that are pushing price. There are a lot of things that push price. You understand? There are a lot of oligarchs. There are a lot of things that push price. Market makers that really push price. They look at where we favor them and they just push price to that level. So basically, it's still demand and supply. It's not just the retail traders that push price or there's an algorithm. People believe, especially SMC, ICT, that there's an algorithm that push price. That for me is a really really wrong belief. So because I understand that this market is just like the buying and selling that we know, right? Everybody here, we have the producers, we have the miners, we have the jewelers in this gold industry. So it is where there is money, that is where markets will go. And if people want to buy, I know people want to sell, but a lot of people might not want to sell because they want it to become a little bit more expensive, right? And that's where you will now see liquidity. Liquidity does not just mean stop losses or orders, stop orders or whatever. It means having enough of buyers and sellers at that time. That's what it means. That's what liquidity actually means. So it means like now, if you have a house, you want to buy, and you only have one person that is bidding, like, for that house, it's not liquid. But when you have like 1,000, uh, you know, person bidders, you understand? That is liquidity, having enough buyers and sellers. So when you have enough, sellers, right, yeah, around there, you say that is liquidity. So for that to happen, price has to go, you know, price has to become more expensive so that it will favor the sellers to come in. When they come in, you will now see price move with a better momentum. So I will still keep my, aside from just technicals, because I don't just follow technicals and say, if I check from the bigger time frame. So from the bigger time frame, market is actually bearish with a considerable break of structures to the downside. As you can see, there have been multiple breaks of structure to the downside. Is it possible that market can come and take out all these plays before it eventually buys? Yes, there's a possibility. So if you check this level, I think we have some instances at around there. Okay, this is just a gap. We're looking at market can come to reclaim this area, and it may never come to reclaim this area. Once there's enough what's it called, buyers in the market will sell. That's the truth. People are buying now, right? When there's enough buyers, the market will sell. You understand? So there is not enough buyers. That's why you see the market is acting slow, and it's consolidating, trying to get enough buyers. And in order to do that, the price has to become more expensive. It's just the primary way to look at these things, just the basic way to look at these things. So if I go to the other time frame, other ways all these things happen, you see price currently swept the Asian high. That means price has gone above it, has become a little bit more expensive than what was priced in the Asian high, where sellers ever got a very good opportunity was around 40.69. And then you're also looking at this now at 40.72. So would this be the price that will push market down to the downside? That's where we now become reactive and not predictive. It is not always the best thing to predict the market. So it's better we react. While we it's good if as analysis you was definitely still predict, but I don't think entering on your prediction is okay. So we have to check if market is able to make a shift around there. If the seller momentum is strong, and then we join, and then we join them. That is what we are going to do. We had that opportunity here. However, you see it was being swept away, right? It was being swept away, and market got up to this point. So people that enter here, place their stops at around here, have as they have all been taken out, and that's the thing of the markets, right? It's both the beauty and the poison, right? Market can do anyhow. Nobody owns the market. So this alone is enough reason for you to buy, because there's a low here that made this high, and the market came here and brushed it, and then now market has taken it and taken it out. Now it has been taken out here. Now I think that is about to happen again. Once that happens again, will it give us the opportunity to buy? Most likely. So wait for a structural shift below this level, and then we can look for an opportunity to sell. So I will be saying that for some of us that want to take this trade, um, so market has gotten to a double high here, it has taken it out. We can wait for market to come back into this level where you can see an inverse fair value gap and a classic fair value gap too, and we can look for an opportunity to sell from around there. That is one. Or if you are looking at markets to be reactive, because you are not looking at just jumping into the market, so you want to take a sniper entry, we can wait for a break, like a major break below this level. Yeah, so once this break, a major break below this level, once that break happens, market goes back into this level, we look for an opportunity to buy, to sell rather, from here. And this sell is going to be a very, very long term sell. So if whatever thing you want to do, even if you want to join this trade now, say you want to look for an opportunity to take this trade from this place, right? You should have a very good stop loss, at least a stop loss that can hold your trade for a minute, still like 300 pips, 400 pips. Because what you'll be looking to get from this trade is market getting to as low as 3,500. You understand? This is like our 2,000 pips. So the risk reward ratio is still okay. But if you don't have that capital size, right? You don't have that capital size, you want to just take whatever you want to. So you better just wait and react to whatever market do for this level here. So I'm still looking for a sell opportunity. Um, for those of you that are also in sync, I don't know if you are in sync with me. Let me see. If you are not in sync, we can have your questions maybe in the comment section, or you can unmute your mic so you can speak. Let's hear from you too, because tree does not make a forex. This is just my own small knowledge. I don't know, you might have a better knowledge or a better view of what you are thinking gold will do today. So I'll mute my mic to see if there's anyone that wants to speak in the next 30 seconds. So you tell dot plus said yes, yes to what? Yes to what I said, or yes, we can hear you. And or we can't hear you. Is that what you're trying to say? We can, of course, I know you can hear me. This is 9:33. That's not the question I asked. I'm saying, does anybody want to say something different, or maybe something in line with what I've already said? You understand? Or something different from what I already said, or a contribution, even if it's not about gold, might be for something else. We can have you speak like in the next 30 seconds. So this, so nobody wants to speak. That's okay. That's fine. So whatever I've said is also that means everybody agrees to it. So let's take the trade. So what I've also noticed that you see this Tuesday was kind of different. So it's not every time, right? It's not every time that you see a Tuesday that will just go one direction like that. You see Tuesday started from around this level. Yeah, I think market started from here and it's just been up the line down to this level with just consolidation, consolidation. This is unusual. If you check last week Tuesday, if you check last week Tuesday, this was last week Tuesday, Monday, Tuesday, right? Market traded downward, down up to this point. I think it later reversed during the New York section, but this is quite unusual for Tuesdays. Tuesdays you see markets, this is market traded from here down to this level. Tuesday are usually like that. Once you start like that, you can see this Tuesday, it will just keep trading down. Maybe it's like 4 or 5 p.m. before you see a small reversal or even no reversal at all. But today is quite different, sha. Maybe because of the, I know it's because of the current fundamental. That's a macro fundamental. That war is a macro fundamental where they are looking at talking. Once there is any slight thing from Trump now that these guys are not serious, let's you see markets will just change, and even market might not need to wait for that before we move significantly to the downside. Like if the consolidation, once it is enough, or once the sellers are okay, that's okay. There's enough buyers, or let's say it is the price has been more expensive, and more expensive means price has come to like a premium level. We can now sell. That's what brings about premium and discount. Just the just the um jargon, just the language. You understand? There's no difference between looking for something more expensive or something more cheap. That's what it means. So if it's more, if it's more, if price is now more expensive, price price here, people want to sell it from here. And another way to do that is also look for psychological levels, psychological numbers. You understand? So some people want to sell from here. They will not sell until market comes to around 40.90, right? From that level here. But technically, if you represent this, you'll find out that market has already gotten to um a phase where it has the first leg, second leg, and then the third leg here. So this also indicates that our bearish pennant formation has already been fulfilled. And that's why you see that I left that trade yesterday. I didn't want to close the trade because I feel like this has been fulfilled. But you see, we don't own the market, anything can happen, right? So I think because of the war yesterday, the market refused to, but eventually it will still move down. And we can have market go even much higher before eventually dropping down. That is why our stop loss is very, very key. So I said we will react to this, we'll wait for a close, like I said, a close below this 40.56 give us an opportunity to wait for a pullback and sell from this level. So some people might have started selling already. Well, kudos to you if it works out your way. So that will be that about that. And let's quickly look at BTC, at least one crypto market, then we'll call it a day. I think USD is still okay. Was bearish before. I said that market just look for a bearish movement. Once the movement starts, we'll look for opportunity to buy. So we would have looked for an opportunity. Okay, yeah, we actually had a trade from here, but the trade didn't work out. So this might be another trade. There must be a reason why I mapped out this low and this high. So I think the market is still going to be very bearish. I see repeated break of structures to the downside from here, even in the daily time frame. 4 hours too is going to be like the same. So market is still going to be bearish from here because of this break of structure. We look for an opportunity to join again from here. So I'm looking for an opportunity to sell from around this level. And if the war with US decide to Iran decide to end, I think it will give them a more bearish sellers more momentum to take this trade. So for Bitcoin, I would be looking for an opportunity to take the a trade from around here. So this place where we are, this entry, I think is still intact. This entry is still intact. So market already made this high during the Asian. So we're looking at the takeouts of this level, maybe during the um, New York today. So this is what we currently have for Bitcoin.